Over rehabbing is one that I always have seen over time, especially as a new investor. You want to make this thing perfect. You see that so often, but you got to understand sometimes less is more, because that longer that rehab goes on, the more increase your costs are as far as the rehab is concerned. I would definitely focus on wholesaling because I think it gives you the best perspective of everything. If the market shifts, if you're not shifting right away with it, you're going to be behind the eight ball here and you're going to start paying a price pretty quickly. For me, that piece of advice would be one thing: make sure your first deal is super profitable. You want that first deal to be so meaty and so good that it just makes you want to do more.
Welcome, guys. Welcome to the REM podcast. My name is Noah, and today we have
Paul Lizell.
Awesome, Paul. Thank you for coming on, brother. I know we've been friends for a little bit. I know you know Tony for a while. Kind of just, tell your story to everyone watching and potentially that don't know who you are. Just kind of give a little background of yourself.
Sure. I'll go way back, right, to when I was in college. And you kind of asked me before, how did I end up getting into real estate? So even before college, from junior high all the way through college, I worked for my uncle who was a general contractor. So I learned how to do every skill there was: roofing, siding, windows, doors, electrical, plumbing, concrete work. We did everything from A to Z, foundations. We did decks. So I knew how to do everything on a house. I've been able to rebuild a house from the time I was pretty young, which was helpful in real estate. Now, my uncle got into buying properties that were multi-units, duplexes, triplexes, quadruplexes, and he would renovate them, refinance them, keep them as rentals. So that got me pretty interested in real estate at a younger age. And then after I graduated from Drexel with a degree in finance and economics, I went into banking. So I was a commercial business loan underwriter for a year. Then I became a business development officer, or BDO, for another 4 years after that. First with the community bank, then with Citizens Bank, a more Northeast-based company out of Rhode Island. And even though I was in the Philly market at the time, but they went all the way down towards Maryland and Delaware. So that was my background in banking and also in real estate there. So I was starting to do fix and flips from the time, I think it was the very end of 2001. It was December of 2001 that I got my very first property. It was a HUD property, bank owned, and that's kind of, you'll find here, is my specialty. It's my bread and butter. It's been, since way back in the day. So 24 going on 25 years in this business doing that. So I did fix and flips. First property I did, we picked it up for $29,500. We sold it for $69,000. I partnered with the guy, we split it. Then I just kept on buying, kept on fixing and flipping. And then we hit the financial crisis of 2008, right? This going 2001 to 2008. Everything was great until then. We noticed some cracks in the foundation there around 2007. And in 2008, it really hit in 2009. And then foreclosures flooded the market, which was great for me because I bought tons of foreclosures, a bunch of HUD properties and a bunch of bank-owned properties and online auctions. So I changed my model from fixing and flipping, which almost put me under because I had massive losses, into wholesaling. And we were picking up properties from HUD for $90,000, selling them for $150,000. These were properties that were listed at $225,000, $235,000. They were taking that significant of a discount because they just wanted to get rid of inventory. They had so much inventory. So my model switched from 100% fixing and flipping with an occasional wholesale deal to 90% wholesaling, a little bit of flipping still, and occasional buy and hold. That was my model through about 2014 when the market kind of settled and then things moved up again. I think it was around 2013 when the market bottomed. In 2014, it started moving up again. I kept doing the same thing, but I changed my percentage of wholesaling and fix and flipping each year, depending on what the market's like. And now we're in a very different market, of course.
Yeah. You talk about pivoting a lot. A lot of people feel like they have to do the same thing all the time. When it comes to overcoming challenges, what do you think the biggest challenge that you've had to overcome is so far?
It was definitely going from that fix and flip to a wholesaling mindset, because it's a mindset that's totally, totally different between the two. Because I'm looking at deals, I'm like, I could sell this and make 40K, but if I fix it up, I can make 100K, right? But you have to get out of that mindset. And I was trying to get out of a hole. And that was the quickest way out of the hole, just wholesaling those properties and moving that way. And you got to go with the way with what the market's giving you. We were in the past 5 years, we were in a wholetailing market where you didn't have to do a whole lot of work on the property, right? You just do some minor painting, some flooring, some minor updates, and then put it back on the market and you're selling it really, really quick. Now we're heading towards a market that's shifting a little bit differently again.
Oh, yeah. When it comes to the market now, what are you seeing right now?
So the good news is from the foreclosure standpoint, from our perspective, not from the people who are dealing with it, foreclosures have been going up quite a bit over the last 6 months. Really, it's been an annual trend, but they really started increasing in the early summer months. And each month you're getting double digit increases in foreclosures. So we're seeing it on our end. We're doing a lot more through the HUD Home Store. I haven't been buying active off the HUD Home Store since about 2015. And now we're buying a lot of deals on the HUD Home Store in different markets, right? Every market's different. There's a lot of these Northeast states that still have really constrained inventory, and some in the Midwest too. And then there's other markets that are burgeoning with inventory, like Florida, you like Texas, like different parts of Louisiana and Alabama, and even Tennessee to an extent. So we're really attacking those markets that have more inventory and looking for those aged, days on the market and attacking those properties.
What do you think a lot of investors do mistake-wise? Like, what mistakes do you often see investors make in this kind of market that could easily be avoided?
Over rehabbing is one that I always have seen over time, right? I think especially as new investor, you want to make this thing perfect. You see that so often, but you got to understand sometimes less is more, because that longer that rehab goes on, the more increase your costs are as far as the rehab is concerned, but also your holding costs, where you're holding on to this property for extra months to get this rehab done perfectly the way you want to. Your insurance costs have gone up all across the country, not just in Florida and California and Arizona, Texas. They've gone up all over the country drastically. So all these costs add up more, and then your profit just gets wiped out. And I've seen this happen with a lot of new investors, going from being able to make money to now you're selling a property at a loss because you over rehabbed it and took too long to get everything done.
Oh, yeah. When it comes to home prices, what's your sweet spot right now that you're seeing?
I love the 1 to 250 range. That's really kind of, because you end up selling anything under 350 or under 400 still moves pretty darn well in different parts of the country. And the median price keeps going up. What is the average median price now? Around 450 or so across the country, which is crazy. That's crazy numbers compared to what it has been, just a decade before that. The affordability has certainly changed for sure, but our average price point that we love is 1 to 250 on a purchase side, because we know we're going to be able to move that property pretty quick. There's such a big buyer base at that price point.
Yeah, we've seen it too. I mean, once we go over, depending on the market, right? Looking at that first time home buyer in each market is still flying off the shelves. When it goes up that, 300-400 plus range, it is definitely taking longer to sell. Are you seeing that your deals right now currently are sitting a little longer than they were, maybe let's say even 3-4 months ago?
Absolutely. Yeah, we got one in Texas just sitting, and and that's a decent market, but there's good bit of inventory. And when buyers have enough choices, things sit. We're in a more normal market, right? You have longer hold times. Instead of selling things within the first 30 days, you're maybe waiting 60 to 90 days to sell things. And that's okay. And you got to drop your price accordingly. We dropped our price on that one 2 times. We're the least expensive property in that area. So we do expect to move. It's just a matter of finding the right buyer, being patient enough for it, and hopefully it doesn't kill you on holding costs.
Want to get motivated sellers that nobody knows about? Introducing 10X TV. If you want to create credibility in your market, find deals that nobody else knows about, and crush your competition, you need to check into TV commercials. It is the new buzz in the real estate investing industry since we introduced it several years ago. I've been using TV commercials myself for the last 12 years, and it's absolutely crushed it. So if you want to learn how to get on TV and to do something that little to no people are doing right now, go to claimmymarket.com. Again, that's claimmymarket.com. We usually only work with 2 investors per market, so if you're interested, reach out to us and book a call to see if you can claim your market before anybody else does. Now back to the show.
Let's say you were to start completely from scratch today. What would you focus on first?
I would definitely focus on wholesaling, because I think it gives you the best perspective of everything. You're obviously, if you're doing direct to sell, you're negotiating with the seller, then you're getting the property under contract, hopefully, right? And then you've got to find a buyer for that. So you're doing a lot more than just a fix and flipper who is buying it, say, from a wholesaler who already did all that work and is now just listing it on the MLS. So you're not learning as much. Wholesaling is like the basics, right? It used to have a bad name to it, but over the years, it has changed the perception of it, I would say. And I personally like wholesalers, right? They've gotten a little crazy with their pricing in different markets, and they've got to come back to reality and stop trying to ask retail pricing. But Good ones move properties quickly, and they get a great perspective when they learn from the buy side to the sell side and how to market the property.
That's awesome. I know this whole, new thing is the whole AI and everyone's talking about it. Are you using it currently in your business, and what do you use it for, if so?
So I use it more on my podcast and video editing and stuff that I'm listing on my YouTube stuff for sure. However, I do utilize it now, especially over the past 2 months in markets. So I'll ask it ChatGPT or whichever one I'm using. That's the one I most commonly use. This particular market, has this had a big increase in inventory over the past several months or years? What does it look like? And you can ask it that. It gives you pretty good numbers and pretty good data. It'll tell you if the market's oversaturated right now or not, and what the price points are doing. Are they going up? Or are they going down in that particular market? So it is great to use from that perspective for sure. And I think we're just going to start utilizing it more and more and more.
That's awesome. Because I know obviously you're in South Florida, but you're investing in multiple markets. So I guess it definitely keeps a tab on other markets for you so you don't have to. That's awesome.
Yeah, we need to do that. I mean, we bought in 44 out of 50 states, and there's markets that, just to give you an example, there was one in Texas we were looking at about 6 months ago, and we had it under contract. It was a HUD property, and it didn't have a ton of inventory, but right before closing, a week before closing, we looked at, all of a sudden the market was flooded with inventory. It was a big red flag, right? And I guess it was one or two big companies were leaving the market. So that everybody had their house for sale, right? Because they got to move, they got to go wherever the company's moving. So that was a big red flag. And we just lost the deposit on that one and just walked away from it. So you got to be willing to do that. And that's where staying on top of that stuff and looking at those numbers constantly. And then before you go to close on a property, making sure everything is the same as what it was when you got under contract and it's not heading in the wrong direction is super important. It can help you not lose money on deals.
Oh, yeah. Most investors I talk to are big on the 80-20 rule. I mean, when it comes to losing money, just making sure it's the least amount you can lose on a deal, and make sure that 80% of the deals you are doing are profitable is a great strategy for sure. What would you say separates top investors from everyone else in the space?
Being able to adapt really quickly and change really quickly. A lot of investors, this goes to any business, right? If the market shifts, if you're not shifting right away with it, you're going to be behind the eight ball here, and you're going to start paying a price pretty quickly. So I used to, and this goes back even as more recently as around 2018, 2019, 2020 is when everything shifted for me. Of course, COVID, right? Everything shifted then. But before that point, I used to look at my company every 6 months. So I would we have the first quarter, the second quarter, and we look at what worked, what didn't work, and then make changes for the third and fourth quarter. And then it became the point where we had to do it quarterly. Now you have to do it monthly. If you're not looking at it every month and adjusting, like, all right, we just did 2 deals in Tennessee this past 6 months, and they both were duds. Let's avoid the Tennessee market right now. Let's shift and look somewhere else. And that's kind of what you got to do. And if you aren't quick to adapt, you'll be extinct. I've seen a lot of investors come and go in this business in my 25 years of doing it. The financial crisis 2008 wiped out probably 90% of them. But we've had a couple that try to grow way too quickly. Yeah, some of them, we're in a couple of different masterminds here. Collective Genius, which is a great one that Jason Medley runs. There's people that used to thump their chest. They wanted to do so many deals. I want to do 100 deals here. I want to do 300 deals here. And they kept trying to do more and more. I'm like, guys, you're doing the wrong thing. I'm actually going backwards. I did 135 deals one year, and I want to do way less. I want to increase my profitability of each of those deals. Let those other deals that aren't that great just go. So they went in the wrong direction. A lot of them went belly up. Some of them were good and can scale and do it if you can scale with it and grow with it. But it's really difficult to do.
Oh, yeah. I'm big on simplicity. And I feel like the investors that have most investors get into investing for time freedom, right?
Yeah.
And then they start chasing, doing this many deals. And then it's like you just threw your freedom out the road because
sure did.
That many deals, it's hard to not be stressed and be in the business all the time. When you say you were in, 2 deals in Tennessee that didn't make a profit, and you get out of Tennessee, how long do you wait until you go back into that market?
Yeah, it depends. And usually it's not that we'll just 100% vacate it, but what I've done was shift our numbers. So most investors look at the ARV and they'll go 75% or 70%. Well, a long time ago, over a year and a half ago, I shifted to 65%. And then you minus your repairs out, and people do 10% above repairs. Well, I increased my repairs to 25% above. And then we increased our hold time from 4 months to 9 months. So by putting all those safeguards in there, it really gave us a lot more leeway to make sure we find meaty deals. And so if we find deals that meet all their criteria, I'll still do a deal in there because odds are we're going to move it. But now what I'm doing is wholesaling that deal instead of maybe doing a whole tail on that deal. I'm trying to find another investor to flip it to. I'll make a quick 10 or 15 or 20, let them make the rest of it on a flip, and I'm happy and they're happy. And I have no time holding it, less stress. Yeah, less money, but it's still a good deal for me, and I have no time into it. So like you said, less is more. It's reducing, it's giving you more time. Wholesaling, I feel like, gives you way more time. Rehabbing takes all your time away because you just get sucked up and wrapped into that rehab and all the different things that come up that you didn't expect that can come up in a rehab, right? Sometimes you run into a foundational issue, or sometimes you run into a bunch of plumbing issues you weren't expecting, or the septic is bad. And depending on where it is in the country, septic can be really expensive to replace. In some places it's cheap. A well goes bad and their well runs dry, and in different parts of the country, you have to go really deep to get water, right? So these are all factors that you got to kind of come up with and know and understand. Buying all over the country, we've run into a lot of these different things, and we've learned how to factor them into our deals. So we're making sure we're getting meatier deals.
Awesome. I know a lot of people talk about the word success, what it means, and a lot of people have different definitions for it. How do you measure success in your business? What KPIs or outcomes matter the most to you?
Number one for us is profitability in a deal, right? And I think that's for anybody, right? And you do want to have those big jumbo deals. Like every once in a blue moon, you'll get a flip that you make 100K on. They're few and far between, but you'll get somewhere you make 100K on. Different markets, you could do that easier than the markets we're looking at, especially at our price points. The biggest number we look at is profitability for sure. And we'd rather do less deals, which goes to the next piece of it here, the ROI. So I'd much rather do, say, 40 or 60 deals a year than 120. And of those 40 or 60, we're making, say, on average, 40 to 50K profit on those compared to we're doing double the amount and we're making 25 to 30K, right? Because that's a lot more work involved. And the numbers probably end up being kind of similar in the end. And to give you just a little back on that story. So when I went from 134 deals, that 1 year, and I think that was 2013 I did that in, to the next year going down to 80, my profits went up. I actually made more money and I did way less deals. So that taught me a good lesson there. And just look for meatier deals and don't chase every single deal and don't chase the new shiny object out there like that we all fall into. Oh, now I could do instead, wholetailing, and I could do fix and flipping and start adding these different things. It's good to be able to do these different things, but you don't necessarily want to just force it. If what you got is working really, really well and you could scale that more, I think you're better off scaling that one thing you're doing really, really well, better off than just trying another new thing because it's a little bit different. Don't follow that shiny object syndrome. That being said, I do have a lot of investors right now because it's really hard to find deals in different markets that are reaching out to me. And they're trying to cut marketing costs, and this is smart. So how can I find more bank-owned deals? How can I, what could I buy off there? So they're actually buying my program, which is super, super cheap. And then they're having their acquisition manager just dive into that and just add that as another potential, resource that doesn't cost them any more money besides, radio or TV like you guys do. And TV, I still think, is the best in most markets out there as far as visibility. You're going to have people wanting to talk to you way more than if you're sending postcards, right? Or just handwritten letters. They've seen you, they recognize you, and there's something to that does matter. But adding another source like that doesn't cost you anything, whether you're buying on Zillow or buying on the MLS or buying bank-owned properties. It's another great way to bring things in. And that's what investors are looking at right now. I'm getting a lot of requests over the past 2 months from that.
Oh, yeah. What marketing do you do?
I do zero marketing. So the only marketing I do occasionally is emails with agents, but that's not marketing. It doesn't cost me anything. I'll reach out to them, send out like a monthly email, like, how is it going? Do you have any properties that might meet my criteria? Because these are all free deals for me if they bring them to me. These things don't cost anything. So that's my marketing right there. So luckily, I'm fortunate I don't have marketing costs. The only time I did is when I did TV with you guys, and I did well with that. But as I told you, my acquisition manager wasn't good. My dispositions wasn't good. We still made money, but I need to clean that up. And you and I have talked about potentially going back in here and starting it up again in my market, which I'm probably looking at doing in the next 6 months or so here once I get everything squared away. And once we have all our, T's crossed and our I's dotted, it's definitely something I'm going to look at here again.
That's awesome. I know for newbies especially, but really anyone, when it comes to the amount of deals and just being able to say it. But when it comes to newbies going into their first deal, they just kind of want to get one done, Going back to your first deal, what would you like one piece of advice for yourself before you did that first deal for anyone else that may be starting or, going into their first deal now?
So for me, that piece of advice would be one thing: make sure your first deal is super profitable. And I'll say that because 90% of people in this business go out of business. And I think it's because so many have a bad experience on their first deal where they lost money. And I do know some guys who lost money and end up still staying in the business and doing well after that. But you want that first deal to be so meaty and so good that it just makes you want to do more and then more and more. And the more you do, sometimes what happens is with investors, they try to grab more and more, like we talk about doing more and more deals, and they lose focus of getting meaty deals, and you start taking more deals just to take more deals. That's where you don't want to go. So finding a great deal is one, and keeping your focus on just getting meaty deals. We have an investor up that I can't remember his name right now, I'm blanking on it off the top of my head, but he's up there in Connecticut. He probably only does 20 deals a year because he averages about 100K on each of those deals. So he doesn't need to do too many deals, right? And that's working smarter and not harder. And he doesn't want to lose focus that he wants to find more deals, but they need to be meaty deals like that. So he's got his eyes on a prize. So that's the way you kind of want to focus on.
Yeah, I think most people, I would agree with you, wash out because their first deal, they just want to get a deal done and they either lose money or don't make money. And then they're kind of like, well, that didn't work. So I would definitely agree with you on that. What do you think? I feel like a lot of people have eerie feelings towards investors. What do you think is a common misconception people have about real estate investors in general?
Well, people used to think of them a lot of times as like snake oil salesmen, right? Coming in to steal your house and try to get it super cheap. And don't get me wrong, I mean, every investor wants to buy it as cheap as they can. Just like a good friend of mine, Noah Seidenberg, he runs a paddle company. It does platform tennis, padel, and now pickleball. And he's trying to source his materials as cheap as he possibly can, right? Any business owner is going to do that. The reason the perception gets bad for real estate investors is because it's their house that these people are living in. It's not just a material that doesn't necessarily mean anything to them, right? So that's why sometimes you get that snake oil salesman, and they're not that. There are some that are, kind of unscrupulous, but for the most part, investors are trying to help make it a win for the seller and a win for them as the buyer. And that's probably 90% of investors out there. You're always going to have some bad guys out there, but most of them out there that I know, they're not out there to totally screw people. They don't want to do that.
Oh, 100%. I mean, most people, their word is their everything, and, their reputation's on the line, every house that they do. And, it's almost funny to a point where it's like, you can't have a business that doesn't make a profit. Like, obviously you need to make a profit on each house. And some of these people are just like, it's almost like common sense isn't super common, one of those situations for sure. But any exciting projects that you have going on, or any goals that you're working on right now? Anything that you'd like to share with the listeners?
Yeah, so we're really focusing in on which markets to be in 2026, because it looks like if you look at it from the economy, the way the economy's go, it's not phenomenal, right? The economy's not great, but it looks like interest rates are heading in the right direction. And if interest rates continue heading in the right direction, and say we get lucky and get into the fives by next spring, we're going to have a pretty good burgeoning real estate market again in a lot of different places. And it'll soak up some of that inventory has been sitting there for a little while. So we're prepped for that and trying to figure out what markets to be in. We are heavy in Florida, one, because I live here. And I just think there's so much opportunity here in certain niche markets here in Florida. Same with Texas to an extent, but we're also focused on ones we love, like Indiana, Ohio. We still do some in Pennsylvania, where I'm originally from, Michigan, Tennessee. I still do like it. We're actually closing on one this month here that we're going to do a little wholesale on. And Louisiana and Alabama and the Carolinas, we're going to focus in on those markets. We're going to try to broaden and do more HUD deals because there's more inventory going on the HUD home store there. And of course, the auction, this is the time of year that the auction companies are really good as far as online auctions, meaning Zome, Hubzu, Hudson and Marshall, and others, because all these asset managers want they want to get as much off the books by year end as they can. So this is where we pick up a good bit of inventory here going into January and February of next year.
That's awesome. Cool. I know you have, I don't know exactly if it's a course or a mastermind that people can come in and learn about what you do. Kind of, where can people find what you do and learn about more about what you're doing?
Sure. They could follow us on a YouTube channel, The Virtual Investor. It's on YouTube. And also REO Auction Academy. That's reoauctionacademy.com. They can go on there, watch a little webinar. We do have a program, a couple different levels, right? We have a do-it-yourself program where people could learn the online auctions themselves. And we also have one where we have a group coaching one, and that's around $5,000 for the group coaching one. And you get monthly calls, you get access to all us, plus you get VIP access on the auction companies where you don't have to on some of the auction companies where you don't have to put that bid deposit hold down, that you can just start bidding on a lot of different properties.
Awesome. Love it. Cool. Any last piece of wisdom or any final thought you'd like to say with our audience today?
I'd say, make sure you're focusing on, especially if you're newer, focusing on meaty deals and be more conservative. So like what I said, I'm doing 65% of after repair value. And when I say after repair value, I'm not necessarily going after repair of a full scale rehab. So I'm looking at something that's more like a wholesale. So that's my ARV. And I'm still using that 65% minus the repairs. Give yourself more hold time. Make sure you get meaty deals out there. Just be careful. In different markets, there's still some markets you could pay way, way more. You got to go to 75% of ARV in the Northeast because there's just not much inventory available. And if you want to stay relevant and compete, you got to do what you got to do. But definitely try to get as many meaty deals as you can. Less is more, and focus on other aspects of life like staying in shape, playing pickleball like Noah and I like to do, or golf, whatever you like to do. Focus on other things you need to find that work-life balance.
Awesome. I love that you brought up the fact that you like to beat my ass on a pickleball court.
And we have fun out there, Noah, playing with each other versus each other. We have a lot of fun.
Oh yeah, it's always fun with you, brother. I appreciate you for coming on, Paul, and look forward to chatting with you soon. Thank you guys for listening.
Thanks, Noah. Appreciate it. Thank you, everyone. Appreciate being on the show.